New York Fed President John Williams, one of the key rate-setting members of the Federal Market Committee, says he's confident the Fed will restore price stability. He is seeing some progress in bringing down inflation, but this is a nuanced view. He sees improvement in inflation from commodities and supply chain disruptions. He notes that they're no longer seeing ships stalled at the ports in California, and new auto inventories are edging back up. But he talks about a third type of inflation. He calls it underlying inflation. He calls it the most challenging for the Federal Reserve. He sees broad-based inflation coming from services and labor costs. This type of inflation, he says, will take longer to bring back down. He sees some progress, though, in doing so. For example, he notes rents are declining and signs of labor market starting to cool. Measures of liquidity. Remember, the New York Fed does monitor markets through the New York Fed desk. He says they have declined, but they're in line with historical averages. On the economic outlook, he sees real GDP rising only modestly in 2023. That could be a zero, or it could be just a few tenths of a point. Unemployment he sees going up from the current 3.7 to 4.5 to around 5%. Inflation will decline from around 5 or 6% now to 3.5% next year. Returns to 2%, the Fed's target, over the next few years. Scott, I'm not getting a big call from Williams, either hawkish or dovish on this. This looks to be a kind of stay-the-course speech from what I can get.
Yeah, rare, given the Fed speak of late, where you get a pretty good indication. I was going to ask you, where are the comments about, pausing, not even in the conversation that we've heard from everybody else? They're not in there?
There is Q&A, though, so I'll go back to my back into my lair, and I'll be listening more to Williams. And if he says anything, I'll pop back on and make sure that you know firstest and fastest.
All right, we look forward to that. Let me ask you quickly, though, before you go. Powell, right, on Wednesday at Brookings. I would figure that's his last public commentary before, because they go into the quiet period. What are you thinking about as it relates to that meeting?
I don't think that, I always ask myself, does the chair have a need to redirect? Does the chair have a need to tell us something we don't know? I don't think we do at this point. I don't think he's unhappy with where the market is priced or where bonds are priced right now. And so I think that he's happy with market expectations, which are in that, say, 5% peak funds rate. I don't think he feels a need to really change the narrative that's out there that the market understands about the Federal Reserve. So I would think also it would be a sort of stay the course type speech.
Okay, good stuff. We'll see again if Williams says anything that we need to know about that. Steve Liesman, our senior economics reporter.